Exercise 4-6 requires us to do the discontinued operations section of an income um, statement. And so we have the Chance Company had two operating divisions, one manufacturing farm equipment, the other office supplies. Both divisions are considered separate components as defined by generally accepted accounting principles. Uh, the farm equipment component had been unprofitable, and on September 1st, 2021, the company adopted a plan to sell the assets of the division. The actual sale was completed December 15th of 2021 at a price of $600,000. The book value of the division's assets were $1 million, resulting in a before-tax loss of $400,000 on the sale. The division incurred before-tax operating loss from operations of $120,000 from the beginning of the year through December 15th. The income tax rate is 25%. Chance's after-tax income from its continuing operations is $550,000. So we have, so we're going to start. So we would go through the income statement and we get down to the after-tax income from continuing operations. And so and that's 550,000. That amount of money is just given to us. We then we list our discontinued operations. And that's going to be, we have the loss on disposal. $400,000. So we make a note of that in there. So the 400,000 plus the 120,000 is a negative $520,000. We're going to put that in parentheses. The next thing up is we have the income tax benefit. All right, now what is that? Well, when we lose money in one division, we are able to offset income in another division. So since our tax rate is 25%, the income from continuing operations will be taxed 25 or will suffer 25% less of the 520,000. So if we divide that by 4, we get 130,000 for the income tax benefit. And that gives us our loss on discontinued operations. And that will be 390,000. And that will be in parentheses also. Then we will put in the net income. So it will be the 550,000 minus the 390 will give us $160,000. And so then we're going to report our EPS. Now notice how EPS is reported slightly different when we have discontinued operations here. We're going to have the income from continuing operations. That's going to be the $5.50, right? The 550,000 divided by the 100,000 shares minus our loss from discontinued operations. And that's 390. And that will give us net income per share of $1.60. All right, so that's exercise 4-6.